Good morning, David here with his weekly week look. Today is Friday 21st of December and this video is going out at 7:30, so it's pre-market open, and we're looking at UK November 2012 daily bar chart. And we've got the long-term chart that we normally look at in front of us, and we can see that we had a test of the 200 here. We've now dropped £15 a tonne and we're stuck here last night's close at 185. We've still got the 200-day moving average, which is our long-term trend pointing up, green at 167. So where are we at the present moment? And let's see where we are and where we find the support coming in at the moment. If we just pop down a lower time frame, and you can see here I've got a 50-day moving average here crossed this green line here, and we broke it on Wednesday, and it came in at 188.99, and at the moment we did close below that level. Below this I've got an RSI chart which gives an indication of where we are on the market in trying to gauge the situation. You can see that the last time we were down at these oversold levels at 33 was last May, just before we saw the big rise over the last 8 to 10 months all the way back up to 200. So the market is heavily oversold at the moment. This is not saying that we can't go lower, but it's just to give an indication that if you were looking to sell this market at the moment, you wouldn't be looking to do that at the present moment. You're looking for a bounce, and obviously on that indication we're looking a bounce back up to sort of the 45-50 level before we see further selling coming in. I would indicate on this level at the present moment, and then popping down even to a smaller time frame here, we can see here quite clearly that I was calling this support here at 188. This has been broken on a daily close yesterday, and we can see our next support down here at 170. But I would say just be a little bit cautious. It has been a fast and quite a quick move of £15 a tonne, and I'd like to see the 5-day moving average, this blue line here, cross below the low here of 188. So it gives us sort of an indication of, an average below this, because with such a fast moving market, you could see it quite easily pop back up to test this sort of moving average at 194. Just put some numbers on this move at the present moment. If we just work around this at the moment, right, we saw a low here of 146, and that was in May, and we had a high here of 200, and that was obviously in December. Now this move, we've got support. Now the total move up has been £54 a tonne, so we've seen from 146 to 200 is at £46 a tonne. The 50% mark of this move then comes in at 173, and we've got a natural support here at 170. So that's where we're sort of going to see a line in the sand drawn, and below that we've got 167. Right, now this move from here 170 up to 200 has been £30 a tonne. So we put this number in here, and a 50% of this move comes in at 185, and last night's close was dead on 185. So therefore we've got some natural support coming in here around this level. Now I'll just put this on here. That's where my support line is at 170. So that gives you some sort of lines in the sand, if you like to say, that if you look at the bigger picture, the total move is £154 a tonne. All right, we've seen a drop of £15 a tonne, but it's nowhere disrupted the whole of this move, and the upwards trend is still in place. So it's very difficult to say the market is going to just collapse right the way down, all the way down here. I mean, it could do, but basically I would expect it to find some support. It is vastly oversold at this level, and I would be looking for a bounce, so that bounce back up. And how would you indicate when that bounce is going to happen? I would then come back to our short-term chart here, and I would use the 5-day moving average to show when how it's going to react over the next, obviously we've got the Christmas period coming up, so we're not looking for any movement next week because markets are going to be closed most of it. So the first week in January, look to see the 5-day moving average, and then look to see the first candle above the 5-day moving average to give us the indication of whether we're going to see the trend then continue to move down, or we're going to see a bounce back up before we then could come down again. If you could see this happened here in October, the price has crossed through the 5-day moving average, first candle here, and we had the buy signal there. You can see it crossed through the 5-day moving average here, first candle, gap up, and we had the buy signal here. And just obviously before I go, just put on here that we have still got our gap here at 79, just below 180, which if we, the last 3 years, these gaps do tend to always get filled. So I'm calling for this, to be filled, whether it gets filled this time on this drop, or we do see a little bit of a bounce, then come back down. But we always naturally, this market does tend to come back and fill up the gaps. We have got a small gap here, up here, back up 198, but it is below a £1 move, so we'll not see this being filled at the moment. So dramatic moves, but the trend, long-term trend, is still up. Yes, we have broken support 185, so looking for a gap fill at 179. Natural support comes back in at 170, and obviously we'll put an update this time in the new year next week. Thanks for watching.